Good morning and welcome to GrainTV. Today is November 1st, 2012. To my left is Logan Burgess and I'm Brock Shimbino. Today is the first day in a few days that we actually have some information to talk about on the fundamental side of things. Let's take a look at what's happening in Chicago. Corn is actually up about 5 cents, soybeans up about 21 cents. Wheat in Chicago and Kansas City both up about 12 cents. You know, Logan, like I was saying, today is the first day in a few that we actually have some information to talk about. First, we'll talk about the Energy Information Administration's ethanol numbers for the week. As you can see here, production actually got a slight uptick this week, up about 3%. We're still well behind where we were last year at this time, down about 10% on the production levels. Stocks got another uptick this week as well, up about 2.4%, and we're well ahead of where we were last year at this time, about 12% ahead of where we were.
That's right, Brock. Well, you know, right now in terms of production, this is a strong showing for the ethanol sector. If we plug this number into our model here that we've been following, the green line is the seasonally adjusted pace that we need to meet the USDA's 4.5 billion bushels of corn going to ethanol use. As you can see here in the yellow box on top, right now our model is showing about 4.4 billion bushels going to ethanol use. This number here that we did get today, this 825,000 barrels produced in the last week, did narrow that margin here. Last week we were running about 125 million bushels behind pace. Right now we're only 100 million bushels behind pace. Very early in the marketing year right now. A lot of things could change, but we'll keep you posted here on this model moving forward. Obviously, the number that the USDA has pegged for bushels going to ethanol production is going to be critical here to the price of U.S. corn. You know, anybody who's a corn bull right now is really going to need to see a strong showing from the ethanol sector. I think they're going to be happy to see this morning's number. One more thing that they're going to need to kind of keep in the back of their mind is the feed number right now. The USDA has some pretty hefty cuts to bushels going to feed usage for the current marketing year with respect to last year. If we take a look at two contributing factors to that right now, we're looking for ethanol production to be down about 10% this year. That's going to produce less DDGs, so corn feedlots that typically feed the DDGs, the demand from them is going to get pushed into the corn market. And the bottom line right now, we're seeing stable to higher placements across the livestock sector right now. So those are two things that could contribute to better than expected feed usage. I think we're going to have to keep an eye on this. We're not expecting a major revision here from the USDA. The next big update we're going to get on feed usage in general is going to be the quarterly grain stocks report. We'll keep you posted on that here on GrainTV. That's kind of what we're seeing this morning in terms of demand. Brock, I know this yesterday actually we got numbers out in terms of crop progress and condition. What are we looking at there?
Yeah, crop progress and conditions were actually delayed a couple days due to Hurricane Sandy and the USDA offices being closed.
Right.
But what we do see is that corn is almost complete, 91% harvested. Soybeans, similar story, about 87% harvested. And those are both ahead of their 5-year average at this time. Winter wheat is another story that we need to be paying attention to. The emergence is the important issue to look at here, is that we're about 4% behind on the 5-year average. I think this is due to some of the dryness down the southern plains right now.
Right.
You know, the good to excellent rating, the initial rating this year was at 40%. That's one of the lowest ratings we've seen over the last couple of decades. If we take a look at the chart that we've been following all harvest progress long, you can see that the red line here is the rate that we've been going at, was a record pace, but now we've actually fallen back down to that 2010 record pace, and we're even with 2010. You can still see that we're well ahead of where we were last year and the average of the last 5 years. Soybeans, a little bit different story. We're quite a bit below where we were in 2010, the blue line. The red line is where we are at this year, and we're actually right on pace with where we were last year at this time. So we are still a little bit ahead of the 5-year average, but you know, we're almost completely done with soybean and corn harvest, so you know, this season's about in the bag.
Yeah, certainly. You know, it sounds like we did have some harvest slowdowns out in the eastern Corn Belt due to Hurricane Sandy in terms of rain and even snow in some places, but it doesn't seem like that's going to have a major impact in general with U.S. soybean harvest here moving forward. You know, that wraps up our show here for Thursday morning. Normally we do bring you the Thursday morning export sales report. That was delayed today due to Hurricane Sandy. We'll be reporting on that tomorrow morning. In the meantime here, we'll be tweeting about these markets as they trade live. @GrainTV is on Twitter where you can find us there. Thanks a lot for joining us. Have a great rest of your day.